Hello everyone, PS from PS Invest Plays here today. In this video, we're going to discuss about Intel. Intel has lagged its semiconductor peers for the last 20 years in performance and innovation. This is also reflected in its stock price, which has not performed as well as its competitors. But it seems things are turning around. Plus, the stock price is dirt cheap at current price. Is this trend going to continue where the Intel stock doesn't perform, or we can expect a higher price in 2021 and beyond? Today, we're going to discuss its business, its financials, review its chart using Elliot wave theory, and see if we can make money. So stick around. I think you'll like what I have in store for you today. Intel, ticker INTC. Intel led the semiconductor chip market in decades past, but some management missteps amid the decline in PC sales created a situation where Intel fell behind both Taiwan Semiconductor Manufacturing (TSMC) and AMD. Under new CEO Pat Gelsinger, Intel has made some significant moves that could pave the way toward a return to the top spot in semiconductor production. But there are also indications that investors may need to exercise patience if they expect this stock to make that leap. Pat Gelsinger was instrumental in the turnaround of VMware and positioned the company to take advantage of cloud providers such as AWS. With Gelsinger now in the CEO position, someone with an engineering background again runs the company. This could bring Intel's focus back to gaining a technological edge. Under the previous CEO, Intel appeared resigned to outsourcing manufacturing to TSMC. However, Gelsinger seems intent on reviving Intel's foundries, pledging $20 billion to expand the company's production capabilities. Moreover, unlike AMD and other fabless companies, Intel does not outsource most of its manufacturing to TSMC, Samsung, and other fabs. This may eventually give Intel an edge since it operates foundries in the US. Today, approximately two-thirds of chip manufacturing, approximately 64%, worldwide now occurs in Taiwan. Taiwan has faced direct threats from neighboring China, which leaves the chip industry vulnerable to geopolitical forces beyond its control. To this end, Gelsinger and other industry leaders have also lobbied the Biden administration for government subsidies to partially fund a revived homegrown chip industry. Since Intel owns more fabs in the US than any other company, it should give Intel a clear advantage if the political situation in Taiwan deteriorates. The current geopolitical situation and a pressing chip shortage may also provide capital for making technological improvements, a process Intel has already started. The good news is that the market has priced Intel's current situation into its stock price. Intel sells for about 13 times its current earnings. This comes in well below AMD and TSMC, which trade at PE ratios of 35 and 33 respectively. Intel plans on capital spending of between 19 billion and 20 billion during 2021. This is well above the 14.3 billion allocated to capital expenditures in 2020, a development that could help the stock long term. Revenue, gross profit, EBITDA, net income have declined year over year and quarter over quarter for Intel, which is not a good sign. But if we look ahead, there could be some pain in 2021. However, I'm looking at some catalysts. The catalyst being the new CEO, Pat Gelsinger. He was instrumental in the turnaround of VMware and when also of EMC. Also, Intel is planning on huge investments to gain the technological advantage. Now, let's look at the charts using Elliott wave theory and see what it tells us. The bull wave for Intel that started in 2009 is still ongoing. It has completed its first three waves. The fourth wave seems to be completed, but I'm not 100% sure of that. I think as long as Intel stays within this bullish band of 53 and 56, the fourth wave should be completed, and Intel should move higher going into its fifth wave, which is a bullish wave, and should take the price of Intel stock to $84.76. If the stock does not stay within this bullish band of 53 and 56, then I expect support to be around $49.54 and resistance to be around $47.30. If the stock falls below the bullish band, then I would start accumulating as much as I can around support and resistance, giving us a 50% upside potential in the next 3 to 4 years, taking the stock price to $84.76. Now, let's summarize. For Intel, my 2 cents are trade with caution. If it stays within the bullish band of 53 and 56, then the impulse wave has started, and if the price breaks below $49, then resistance should be around $47.30, which is an excellent buy zone. For long term, you can easily expect a 50% upside potential in the Intel stock. What do you think of this analysis? Please leave a comment and let me know. As always, don't forget to subscribe, hit the like button, and share this video with your friends and family. Until then, bye-bye.